Today, I made over $3 million trading. I know that sounds absolutely absurd, but that's the truth. Made $3 million trading from an accumulation of overnight trades and then New York. Today, I'll be reviewing that, going over exactly what I did. And in this video, you'll find out my bias, my plan, and my execution to it all. So with that being said, let's get into it. An insane day, a record day for your boy. Before this, my record day was in April where I made 1.1 mil, I think, in a day. Today, obviously, trumps that. Made over $3 million. I made over $2.4 million on one account. And here is the account. On the top right, you can see the P&L listed $2.4 million. And just to certify it, you go to account reports, you can see it is a live account. $2.4 million on one account and over $3 million combined. With that being said, let's get into it. So the first trade I ended up taking, it was two trades mainly, was an overnight session take. It was a trade determined via the Asian session, which I had taken a short on the NASDAQ, NQ. So what was my bias? Lanta, what was the trade and what was my bias? Well, the result and the outcome of the trade ended up closing out realization about a 40 R. This also now is my biggest trade of all time R-wise, an insanity type of trade. And then we ended up seeing price, or excuse me, we ended up, let me say it again. We came into the open, I came into the open with a bearish bias. If we go to higher time frame here and it gets started on terms of the bias, it all starts from the daily time frame. This is the same thing that we talked about a couple reviews ago, or the last review a couple days ago, is looking at the daily time frame. You guys know back in April, I was very bullish with price. I kept on longing. Every trade I took for quite some time was a long. The reason you see me thrive and take a short today and be able to thrive is because I'm playing with market sentiment. And that's what I was doing when we were trading at all-time highs. A great way to always gauge price through higher time frame is keeping it simple all the way through. What you want to look for is you want to look for a price on the daily time frame to A, what type of candles are we having? Are we having engulfing candles, doji candles? B, are there more bullish or bearish candles here? And you could see consistently throughout the daily time frame in this push up, every time we were always consecutively met with engulfing bullish candles, and anytime we had bearish candles, which was very minimal, every time you would see price not be as engulfing. And if we did see a sell sequence back down, we always saw price trade into an imbalance, and almost every time we tapped that imbalance, we traded back up. Well, if you look at price today and coming into today, looking at the daily time frame, we were seeing price actually starting to violate those imbalances. If you look at the 4 hour, for example, you see consistently, we do see retracements or red candles, but we don't see price create lower highs. We don't see price create lower lows. We don't see price invalidate these higher lows. What you see coming into today's open, what you see price do consistently is start to create higher lows. That's what we do here. That was the first indication. Paired up with that, we had bearish S&T off the all-time highs with ES and NQ, as NQ created a new high, whilst ES did not. So kind of coming into the Asia session for last night, well, I dumbed it down. Now that we have a gauge of our higher time frame outlook, seeing that we were bullish in April because we were seeing price consistently trade up, and now we're bearish because we're seeing those imbalances get wiped out, giving you bearish indication that price wants furthermore lower. We then went to lower time frame, and it could be the 15-minute time frame, it could be the 30-minute time frame. What you see me look for here is I look for price to tell me lower time frame that it wants to trade lower. You guys have to realize it's as simple as this. Higher time frame, get a gauge of your bias. Lower time frame bias is to simply time it up, if that makes sense. Higher time frame, overall picture. Lower time frame, timing the picture, if that makes sense. That's what I was looking for here. And you see, initially through New York, the previous day, yesterday, we see a beautiful push up here through New York, a beautiful buy up. But what do you see after hours do, which is historically one of the parts of the stock market which never moves after hours, 4 to 5 p.m. When do you usually ever see that happen? Never. But you end up seeing price be so bearish to the point where we ended up dumping after hours. And not only that, through the interest of the Asia Open, we see price also dump as well. So kind of a continuation here. 5 to 6 was closed. Asia opens at 6 p.m. and we see price continue off that. And so all I was looking for now was a potential entry model to trade lower. Again, higher time frame dictated bearish bias because we see higher time frame imbalances get wiped off. Again, one more time. We did not end up doing that at any point in time when it came to April and seeing price push up. Had we, you could have possibly seen me flip my bias and narrative to lower. But being that we had seen consecutive days now this week where you see price seek lower displacement in every which way possible, that gave me the interest in lower. So this short intent here, the first trade I ended up taking was the short, and it was a simple continuation model of what we did through after hours and through the Asia Open. It was still a bit risky because you were looking for more displacement here in this continuation, and no massive liquidity was taken out yet. There was no perfect entry, but we see price create a 5-minute bearish fair value gap where we then see price come up and initially violate it, turn it into a bullish inversion fair value gap. But what do? We see price come right back down, and we see price eventually violate that 5-minute bullish inversion fair value gap. So that's a bearish sequence. We take an entry, and my stop could have honestly been placed this relative high, but I wanted to give my trade a bit more breathing room, and I placed my stop this 5-minute wick high, just giving it a bit more breathing room in the case we saw price enter and then come back up and then sweep this high and then come back down lower. We then see price go right away, and we see price get smashed. And what I ended up doing for this trade right here specifically is I ended up scaling in as time went on. So as we would see lower and lower and lower, I would scale. As price would give me more indication that it was more bearish and leaning towards more downside, you would see me scale in. That's what I did with this trade. Now, keep in mind, I had my stops in place. I had my trail stops in place. We end up consolidating for the bulk sum of overnight price. Then we see price through New York start to come down here. Well, my bias for New York was very similar. What I was looking for was for downside because, again, although we end up seeing price come down here and we see liquidity being taken out in previous day low, you never see price showcase an interest in reversal. Like we said, going back to the higher time frame narrative, you see a low get taken out, and what you always want to see when it comes to reversals back higher is what you see here, right? What you see here, you see true bullish displacement back up. Look at this hourly reference here. Look at this hourly reference here. Look at this hourly reference right here. These type of displacement sequences are very engulfing. Now, if you look at the hourly time frame on when we took out this low precisely, did we look the same? No. It was a lot more consolidative. It told you that although we had many attempts to trade higher and we saw some type of retracements, it was never fully there, which told me that price most likely could trade lower. If we wanted to see reversal in the market, we would have already seen it. We then come back down here and utilizing our opening range move, which is typically the first move after New York Open into an area of liquidity being an overnight high or low. That helps us give us a gauge with our New York bias. So we were already naturally bearish through Asia. We ended up holding this trade, chop, 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 chop. We eventually end up seeing price come down. And we see price come down here, and our opening range move ends up being a very bearish one where you see New York come down and you see New York take out Asia lows. And from there, you see price essentially ultimately trade lower. Just to kind of reference through New York here as well, we ended up seeing our London low get taken out, which was the true opening range move as New York opened. Then we had the move, and then we see price continue lower. At no point in time did price ever once tell me that it was going to be bullish here. A lot of people get confused, or a lot of traders, they see a large move in the market. They're like, yeah, it can't be going down much more. So why not look for longs? Why not look for longs? We're late on shorts. Why not look for longs? Well, that's how important it is to get a gauge of your bias. If you're just simply looking at price within the last 15 minutes, you can't really get a gauge. We've looked at higher time frame, we've looked at overnight price, and we've looked at the opening range move, and all three factors have been A+ with our bias. Keep in mind, as we're hunting a potential trade through New York here, I'm still holding this NQ trade, which I ended up trading and taking overnight. We see price sell and sell and sell. We had draw targets in mind, and you can see me kind of mention my outlook in the morning in which I wanted to see price do. Eventually, we end up taking our first trade, which did end up being a half-hour loss. Our first entry in the market, it was a bit premature, but the entry briefly discussed was a 1-minute inversion entry, similar to the second trade, where we wanted to see price come down, invert, and then look for these equal lows to get ran at this higher time frame low level in 75.05. We end up coming down here, inverting, but ultimately never ended up seeing the true turnaround. We ended up taking our second entry off a very similar entry. This was based off combining two 1-minute gaps. This right here is a very similar entry to the first one, except our timing's a bit better on this one because we wait for more of a displacive sequence back up, a bit of a retracement, a failed move, and then a move back down. We then end up taking our entry here where we ended up seeing price come down and violate where you eventually see me say, I am short. You see me mention my exact target entries. And then you also see me mention exactly where my break even is and what I'm looking for. Obviously ahead of time as well. Not only on live do you see my real-time thoughts and the trade idea I present, but you also see it via text beforehand. I alert it, boom, and then we take the trade, boom, targets mentioned, and then we have, after a bit of consolidation and a bit of drawdown, we end up seeing price come down. And then our first target of interest was discovering this new week opening gap, and we end up seeing price smash that. The difference between today and any other day is you're seeing every time we've taken out a low of significance, we've always seen price what? Engulf and trade with speed under that low. Every time we do that, that's an indication that the next level can most likely get taken out. Whenever we're done with trend, whenever we want to see a reversal on the market, we end up taking a low and we end up seeing a displacive move back up right away. How often do you see price take out a low, a high, and then reversal, chop for so long, and then end up seeing them move back up? For me specifically, I like when I see price come down, take an area, come up, take a high, and then after taking that, we see displacement immediately, right? Because that tells you not only is liquidity taken, but price is also starting to turn around as well. So here was the ES trade, a beautiful entry. Again, reminder, we took a half-hour loss in the morning. Then we ended up seeing price come down here, and we ended up taking this trade. Take profit one got smashed. If you guys don't know, we have a specific way on exactly how we scale. If you go to the Lantos model section of the Discord, we have specific channels for certain things. And under risk management, there's a video tied in there, which tells you exactly how I trim on each type of account. And if you follow this video, you R-wise would be up the exact same amount of money as I would be, as we've discussed on reviews, previously, as we've done on live a lot of times as well. So we end up taking this trade and we end up seeing price go, and go, where we eventually end up realizing this trade for a closure at around an 8R. Alert-wise, this counts as a 4-hour trade via 1-hour risk, if that makes sense. So we have dedicated days, a schedule essentially. Every single day of the week, you know exactly how much Lanto risks R-wise and relative. And essentially, today, we ended up taking this trade, but since we were half-hour risk, it's an 8-hour trade, but through 1-hour risk, it's a 4-hour trade, if that makes sense, not to confuse you guys too much. But a beautiful trade nonetheless, and we see validation in price. After TP1 chat, all it is simply trailing your stops and letting price go. We kept on doing that over and over and over again. You see me consistently mention anytime I did anything, and then we see price go. And obviously the community banked, and we did a boatload of money today trading, and just an awesome day overall. So that's pretty much it. That's the review. Hope you guys enjoyed it, and a career day. Hopefully one day in the future, Lanto, you can look back at this video and you've topped this day, but we'll see if it ever happens. Peace out, y'all.